Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Stock Market Recap. And this is August 2nd, 2025. And remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. All right, let's get right to it. The market started the week off with a bang, and then after Amazon reduced forward guidance and more tariffs went into effect, Freaky Friday just plain hit us upside the head. And Monday will tell us a lot more about the low job creations and the revised reductions from previous months. So Monday's going to be a very important day. Now, our weekly stock analysis, well, Uber. Is that the stock of the future when autonomous cars come on the scene? Whoa, might be. Right now they're exceeding all expectations as they add home delivery to just plain driving us around. In our ETF video, well, some of the slow growth utility stocks are becoming power stocks. Oh yes. You won't believe the 1,000% gain stock that we found in the utility ETF. Can you imagine? And there's two of them like that, folks. Love the computer ETF segment of our computer program. And by the way, the XLU, which is the utility ETF, is outperforming the S&P so far this year. All right, let's go right into the S&P. And you know the drill here. The top line and the bottom line, the red lines, are volatility bands, and they were named after John Bollinger, so they're called Bollinger Bands. These are his specific volatility bands. Center line's the 20-day moving average, and you can see that this market was just riding high all the way up in that top band, and then on Thursday it went above the top band and then came down and closed within that top band. And then Friday, we just had this gap down. Everything hit us all at once with the new tariffs going into effect yesterday and also today, and Amazon coming out with weaker than expected forward guidance, where Apple and Microsoft and Meta all did wonderful. So those are three stocks that sent the market up, and then all of a sudden Amazon put a downer on the down day. So the S&P is down about 165 points on the week, which is almost nothing, but still it's scary when it happens all at once. And now we're down toward that bottom band. But the problem is down here we are looking at an intermediate term indicator, and that is starting to move down, where before it was just pretty much flat all the way. But today was kind of a down day. Yeah, that's all we could say about that. And let us look at the SPX, and we'll zoom in on this because this will give you a better idea. You can see how we went down on Thursday because we had this big move on Thursday, but it closed. See this little nib right here? It closed down at the bottom yesterday, and then this morning it just gapped down below the 20-day moving average. And it looks like, and this is why we're looking at this chart, is because this is the 50-day moving average. So we could fall below the bottom band from the previous chart, fall below it, and head for that 50-day moving average. That's why Monday is going to be so important. Up here, this is the stochastic indicator, and boy, it looks like it wants to go down further, doesn't it? So maybe this 50-day moving average right in here is the place where it will go to. And down here, this is the same intermediate indicator that we looked in the previous slide. You could see a little bit better that it pointed down. And right now, this is not showing the volume, but the volume right now is about the same as yesterday. But I'm recording this about an hour and a half before the market closes. So we'll see if that volume increases, and it probably will a little bit up here. So you can see these red lines represent the volume when the market closes down for the day, and this will be the fourth down day in a row that we've had in the S&P. So we'll get a rally sometime next week, maybe turn around Tuesday if the market keeps falling Monday, and maybe sometime during the week we'll get a bounce. And the question is, will it be a buying opportunity? And folks, other than those tariffs and them playing around with them and who's going to raise it 5% or lower 3%, as that subsides, then I think everything going forward will be okay. The only problem is that the job creation was only around 70,000 on Friday, And in previous months, it has been reduced down to 7,000, 8,000. So we can see the job market definitely weakening in here. Now, buying is still good. So it looks like people are using their credit cards and whatever. So they're still out there buying because the GDP was revised upward, which is a surprise. Meanwhile, the job market is really starting to tighten up. And what is coming out of the White House is that the Fed is too late in lowering interest rates. Not that they've lowered interest rates, but even if they do now, they're too late because of that low job creation. So we'll see what happens here, folks. It's going to be a lot of rhetoric over the weekend, and we'll just sit back and forget about the market for the weekend because, boy, look at this run in here that we've had off the bottom way back in April. So, yeah, it's been wonderful, and maybe today's drop might not be anything more than coming down to this 50-day moving average. And we're looking for a better year coming on and a better end to this year. So one thing that I always look at and always been taught to look at, you ask yourself the question, does the market look better or does the economy look better next year than it does right now? And you have to answer yes, because all the tariffs will be out of the way by then, and there's a lot of money being invested in this country from overseas. So this is the place to be as far as investing goes, or at least one of the best places to be as far as investing goes. And when that starts kicking in, we're going to see this economy really move. So is this a drop in the bucket that we're seeing today? Probably is. In fact, by next year, we won't even see this blip on the charts out there. But right now, we are a little bit worried about it, but we want to go down to this 50-day moving average. So we're not that worried about it at all. We'll be getting a buying opportunity, and then people will come rushing by to buy in. So we'll look at it, folks, and we'll see what happens. Meanwhile, the SPY is down about 14 points this past week. Now, remember, the SPY is 1/10 of the S&P 500. And they call it the SPYDR, SPYDR. And as I said, it's 1/10 that of the S&P 500, down about 14 points this week. And we have that put protection in place, so we don't have to worry about it, but it's a long way down. Don't think we're going to need it, but it's still there just in case. And the QQQs, we also have QQQs put protection. QQQs down about 14 points this week, so that's quite a big drop for the QQQs, which usually move about 2 points a day. So we're getting it all pretty much in one day right here this Friday. So, folks, we've had a good week up until Friday. If the market ended Thursday or the week ended Thursday, we'd be very, very happy. So go out. We'll worry about it Monday. We'll see how the market opens and then closes on Monday, and we'll go from there. So get out. Keep your mind off the market, be with your loved ones, have Sunday dinner, but most of all, go out and be safe. So, folks, we'll see you right back here in a couple of days. Have a great weekend.